Early on Friday, the US dollar index stabilized. However, this does not mean that the US dollar has closed its eventful and highly volatile week. The greenback may show one more jump amid the US inflation figures, which will be issued later today. At the beginning of the day, traders took a pause, thus allowing the US dollar index to stay at 105.60 points. Price reports are providing analysts with several hints about future movement in the US dollar index and major pairs. However, the main indicator that shapes the currency market situation is the Fed's monetary policy. The previous data reflected that core inflation in the world's largest economy was very difficult to control. Consumer prices are moving up amid a strong labor market and rising salaries. Since the US unemployment claims confirm this state of affairs, the likelihood of a key rate cut by the Fed is striving towards zero. Curiously, in recent weeks, macroeconomic reports from the United States, Europe, and Asia have been surprising traders. What's more, it's very difficult to predict currencies' movements under such conditions. To understand what changes the expected data may cause, it's better to monitor publications online. Let us find out what reports will attract traders' attention early next week. You are watching a video review of macroeconomic events. On Monday, the Eurozone will publish its business and consumer survey. According to the forecast, the indicator may rise to 97%. In March, the indicator jumped to a 3-month high of 96.3%. That's why it has every chance to continue climbing. Notably, this week the euro has tried to resist the US dollar amid positive reports on business activity. However, the greenback is still outperforming its counterparts due to the difference in the key interest rates in the United States and the Eurozone. Although the US economy has become weaker, its status as a leader is still in force. Meanwhile, China, which is the second largest economy in the world, is causing some concerns. The country has curbed its real estate sector. Now it accounts for 25% of the entire economy, and the leading developers cannot cope with their debts. In addition, Beijing continues to rely on expanding production and increasing exports. However, the economy should have focused on maintaining domestic consumer demand. Moreover, the main drivers of the so-called Chinese economic miracle, which suggest a cheap labor force and massive injections of foreign investment, are no longer working. The population has aged, while investors withdrawing funds in favor of neighboring countries. The situation will be somewhat cleared up on Thursday after the issue of manufacturing PMI figures for April. A month earlier, the indicator advanced to 50.8 points. It was the first rise in the last 6 months. Now, analysts are very optimistic to expect a climb to 51.2 points. If the predictions come true, the US dollar may drop, whereas the Australian dollar and the New Zealand dollar, which act as a liquid proxy for the Chinese yuan, may gain in value. Much more interest on a Tuesday will be caused by the publication of German GDP growth rates. Given that Germany is the leading economy in Europe and the third in the world, its GDP of -0.3% in the last quarter of 2023 looked depressing. In the first quarter of 2024, the indicator may advance by 0.4% to 0.1%. If the predictions come true, the single currency will have a strong argument to resist the dollar on a long-term basis. The euro will become even stronger if data from Germany coincides with that from France, Italy, Spain, and the whole Eurozone. All these reports will be disclosed on Tuesday. In particular, in the fourth quarter of 2023, the Eurozone GDP stagnated. Analysts suppose that in the given period, the economy may expand by 0.2%. For comparison, in the 2023, the Eurozone GDP inched up by 0.4% after a considerable rise over 3.4% in 2022. This means that any figures above zero will boost the euro. The consumer price inflation data will also be important for the single currency. In March, it reached 2.4% year-on-year, which was still well above the 2% target. The central bank considers this inflation level to be optimal for economic development. Nevertheless, the forecast is still set above this line at the level of 2.4%. If the predictions come true, the euro-dollar pair is likely to show low volatility, as traders have already priced in this information. In the case of a rise in the indicator, the euro-dollar pair may gain in value thanks to hawkish signals for the regulator. Also, on this day, the API will issue its oil reserves report. It's quite difficult to make any assumptions after a jump of 4.090 million barrels seen last week and the following drop of 3.23 million barrels. Any drop below the forecast of 1.8 could trigger an increase in oil prices. However, even strong reports could be ignored amid disturbing political news. In this case, the quotes will also go up. Reports on a business activity in the U.S. manufacturing should be of great interest to the markets. Notably, last time this indicator produced a stunning effect. In March, it jumped to 50.3 and recorded the first growth in the manufacturing sector after 16 months of a recession. However, the forecast for April is set at around 49 points. What does this mean for the foreign exchange market and for the US dollar? In this case, the greenback can only get support in a case of unexpected results. It means that the indicator should slide below the 50-point threshold, which separates contraction from expansion. If the business activity in the sector turns out to be high, the US dollar will have a chance to confirm its status. Later, on Wednesday, the greenback will get one more chance to gain in value. On May 1, the Federal Reserve will end its two-day meeting and announce its key rate decision. However, this could hardly be the main event, as economists do not expect any changes. Jerome Powell's comments are likely to cause a stronger reaction. The press conference will start 30 minutes after the key rate announcement. Analysts are likely to search for hints in Powell's words. We hope that our review of the macroeconomic events provides you with some hints about possible asset movements. Subscribe to our channel and compare your predictions with the real state of affairs. Stay tuned with us.